Hey there traders, welcome back for another free video from thestockbandit.com. I'm sure glad that you made it. We are in the middle of a mini-series about the full-time trader and what does it take to trade full-time. I get asked this a lot, so I've compiled these videos as a resource. It's a 4-part series and this is part 3 of that series. So before we get started, let me just remind you that this is my opinion on what it takes. And this is not a guarantee that you're going to make it. Trading involves risk. You can always lose money. But these are some theoreticals that I think are highly important for those considering going full-time with their trading. So in this video, what we're going to cover is the big question of, can I avoid the same mistakes that market professionals avoid? And when you consider going full-time, that's one of the big things that you've got to consider. So let's take this one piece at a time. The first thing that you need to avoid making the mistake of is being undercapitalized. I mentioned in the last video that we're going to discuss that in a little bit more detail, but being undercapitalized leads to a number of other mistakes. So this is a mistake in itself, but it leads to another several different mistakes. Let me walk you through some of these. One of them is it leads to over trading. If you don't have enough capital, you're looking for a very rapid turnover of your capital over and over and over, which means you can make too many trades in an attempt to find just kind of that one big winner that you really probably need if you're looking to rapidly grow your capital base. It also leads to forcing trades. That means by over trading, you're looking to take trades that may not necessarily fit your criteria. You're probably lowering your standards somewhat and forcing trades just for the sake of being active. It also leads to excessive risk. If you don't have enough capital, you're probably putting trades on in stocks that have the potential to make really big moves, or possibly even in futures or options. What you're doing is you're probably taking excessive risk in order to generate a rapid big return because of your need to have that. And it also can lead to feeling just behind all the time. Maybe you feel like you've got a lot of ground to cover and a lot of ground to make up, and psychologically that's a big burden to carry. So don't be undercapitalized starting out. It leads to way too many mistakes. Now let's talk about some other trader mistakes that many traders make, and these are all mistakes that the pros have been able to suppress for the most part. Now one of them, and a primary one, is refusal to lose. Okay, many traders just cannot accept taking a loss, and in our society we're taught that being right often is a good thing. Well, in trading that would be nice, but the fact of the matter is in trading you're wrong a lot. So you've got to accept that. You've got to be willing to take a small loss rather than let those losses snowball. You've also got to be willing to avoid averaging down. Now many people say, okay, I've put this trade on, it's gone against me. I'm either faced with the decision of staying with this trade or cutting this loss right here, which again with 0.1 some people are unwilling to do that. So instead what they do is they average down. They add to their winning trade so that it's improved their average cost on the trade, and therefore they don't need quite as big a move to bail them out. But that is a huge mistake that can bury you as a trader. Another mistake is an attempt to nail turning points. A lot of people find it quite sexy to find the absolute top and short the top in the market, or try and find the absolute bottom and try and buy the bottom. So this attempt to nail these turning points really costs a lot of would-be successful traders. It costs them a ton of money and a ton of opportunity as they eventually lose their money and get incredibly frustrated, because rather than trying to catch a piece of an existing move, they try and start a new move, and that just doesn't work for the individual trader. Another mistake is underestimating the difficulty of trading. Trading is really hard. You're going up against some of the brightest minds in the entire world. You're going up against some of the fastest computers in the entire world. So it's a very difficult endeavor, and it's something that really requires your understanding and your respect for the market. So do not ever underestimate the difficulty. Some people will tell you stories of overnight riches from trading and big successes that happen with ease. Do not let that fool you. Trading is a difficult endeavor, and you've got to really respect that and respect the market. Now, one other trader mistake that is made quite often is people place too much importance on one trade. Now that may mean that you're piling all your resources into one trade, so you need it to work out. But it may also mean that you're piling too much of your confidence into this one trade. Maybe this one trade is the one that you're banking on mentally to bail you out of a slump that you're in. So it may be a cash allocation to it that's too big. It may simply be a confidence allocation to a trade that's too big. But you need to view each trade as one of the next 1,000 trades that you're going to make. Don't make any one trade the make or break trade for your trading career. You simply cannot make it that important. So let's talk about blowing out. Obviously, this is one huge mistake that many amateurs make that pros know how to avoid. And this involves a number of things. By blowing out, there's one way to do it, which is losing it all. Yeah, you may just pile all your money into something and it may just fall apart and you've lost all your money. Yes, that's one way to blow out, but it's really not the most common way to blow out. The most common way is to get married to an opinion. And so by doing that, it leads to some very huge losses because, number one, you feel the need to make up that loss. So you've compiled all your confidence, all your capital into this one idea, and it's not working, and you're married to that opinion, you're unwilling to shift out of it, and now you feel this need to make up those losses. So that really can lead to some desperate decisions that are very poor. It also can lead to a huge loss of confidence, and whenever that happens, you're done as a trader. It is not something that you ever want to happen. You can replace capital much more easily than you can replace confidence, and I've seen that happen over and over and over through the years in my own trading career with the people that I've encountered, and I just cannot go through this presentation without sharing that with you. Protect your confidence and do not get married to an opinion. Now the other way that getting married to an opinion can really cost you, and it's kind of an effective blowout, which is it ties up all your capital. You are completely handcuffed. You're unable to trade. You can't do anything else with your money. You can't capture opportunities that you're facing when you're married to one opinion and you're stuck in that one idea. You're sidelined until that one trade either completely does you in or until it begins to work, which may be months or years. It may not ever work. So it ties up your capital, and that's effectively like blowing out, because when you can't trade, it's the same thing as losing all your money. So there's a number of mistakes there that professionals are able to avoid that amateurs need to certainly consider and need to have proven that they can overcome those before considering whether they can trade full time. So as always, thank you for watching this video. I'll see you very soon with part 4, and we'll wrap up this series here. And but until then, trade like a bandit.